Although the Dow traded slightly lower today, utilizing candlestick analysis, we could see that after it traded down extensively, by the end of the day, it was back up above where they opened it, and they closed it just above the T-line. Very simple rule. As long as they don't close it below the T-line, the uptrend has a much higher probability of still sustaining its upward trajectory. Also, the fact that they were buying, even though the market was eventually down, was illustrated by the fact that they were paying, or buyers were in here after the open. Add the visual evidence that as soon as the NASDAQ opened, it immediately started trading higher. To the candlestick investor, that was easily recognizable because as soon as it started trading higher, this little candle was green. And then at the end of the day, notice what it finally did. After opening at the 50, it did a left-right combo, which is one of your strongest candlestick reversal signals, and closed up above the T-line. You can see what the overall trend is, and that the investor sentiment, once it got back to the support level, became bullish again, making the upward, or the top of this trend channel, the next likely target. This analysis can be made much more accurately by seeing what type of signals are occurring in a trend of the markets. Recognizing patterns such as the scoop pattern, you can see how the handle is relatively flat on STAA, pulled back, and notice where it pulled back to. A doji right on the 50-day moving average, followed by bullish confirmation. Now a gap up. What do we expect coming out of a scoop pattern? A very strong slingshot effect to the upside. That was the purpose of our recommendation on SOI the other day, because of the flat handle, scoop pattern, slingshot effect to the upside. The reason we recognize these patterns is because the Japanese race traders, after 400 years, kind of illustrated what normally would happen in investor sentiment. All we're doing is learning to recognize those patterns that have a reoccurring prospect of producing profits after that pattern setup. Candlestick signals allow the candlestick investor to put positions on that have an extremely high probability of working in the right direction, as well as producing an extensive profit on the trade. Our recommendation on RGNX is based upon the Morningstar signal. That's a large dark candle, an indecisive day, and then the third candle, a bullish candle, closes more than halfway up this candle, called the Morningstar signal. Now we're looking for a close above the T-line. So this all illustrates that right here on the 50-day moving average, we're starting to see buying. Positive trading tomorrow would confirm the left-right combo today. Again, a very strong bullish candlestick reversal signal following a Morningstar signal. Positive trading would give us extremely high probabilities that the next wave to the upside is in progress, which would be somewhat the same magnitude as this wave right here. This identification of the signals and the confirmation, with stochastics in the oversold area starting to come up, allow candlestick investors to have their funds placed in situations where the probabilities are greatly in their favor that they're going to be in the right place at the right time. Once a strong pattern is recognized, such as the J-hook pattern right here that broke out through the 200, which also told you they were breaking out through this level, now allows us to have very simple trend analysis that if we know this is in an uptrend, we have a very simple factor. As long as this stays above the T-line, we can stay long. This allows, or this keeps an investor from getting whipsawed in and out of a position. You can rest very comfortably at night knowing as long as that trade stays above the T-line, your uptrend remains in progress. That'll be it. We'll see you in the chat rooms.